Hello everyone and welcome to the Wright Research 2024 wrap video. This is the final video of the year 2024 and 2024 as a year has been a remarkable year for us. It has been a year of growth with many of our strategies, outperforming the benchmarks by a margin of 10-20%. It has been a year of evolution where we have seen our allocation and strategies evolve and we've seen so many innovative solutions come in and improve our strategies. 2024 has been a year of learning which has strengthened our systems and made us more confident about the tough and volatile years ahead. And a heartfelt thank you to all our clients, our partners, as well as our team members who have made this year an amazing year for Wright Research. Your collaboration and feedback has been instrumental in shaping this year. So let's start by going over the big picture. Our PMS portfolios as well as small cases have outperformed the benchmark by a good margin in this year. While regulations restrict us from talking about the small case performance, here's an overview of our PMS performance. So while in the year 2024, the BSE 500 has given close to 15% returns. The Wright Factor Fund, in fact, has given a 38% return to our clients. Wright Momentum Fund has given close to 35%, and Wright Alpha Fund has given close to 27% returns for our clients. So we have outperformed the benchmark by a margin of 13 to 20% across this year. And while you can see a good 23 to 15% outperformance across our portfolios, this performance has also come across different market scenarios. So initial 6 months of 2024, we saw the infrastructure segment do really well and our strategies outperformed. But even in the second half of the year after the elections, we've seen the regime shift and the defensive stock do well, which is where our strategies have also done well. Another big milestone for our PMS is that we are closing 2024 with close to 400 crores in AUM. This is quite exceptional because, at the end of 2023, we only had 60 crores in AUM. So there has been a great jump and a good growth in the reception and the adoption of our PMS. And this obviously has been because of the great engagement that our clients have and also the robust performance of our portfolios, as you can see on the screen. So here's an overview of the performance of our 3 PMS portfolios. So firstly, our Wright Factor Fund. This is our multi-factor strategy. What that means is that in this strategy, we are looking at a mix of different factors. We are looking at momentum, which is more technical factor. We are looking at, value, growth, quality, which are more fundamental factors. And we are looking at unique things like, analyst expectations and news-based sentiment. Also, this strategy based on the market condition pivots to different factors and, it has done so really well in this year and has given these exceptional numbers. The Wright Factor Fund, as you can see, has given close to 40% returns in this calendar year, and you will see that the strategy has outperformed in a majority of the months in this particular calendar year. You can see that the strategy has also ranked the top quartile in terms of all PMSs across all these 12 months and actually ranked in the top 10 in many of these months as well. Our Alpha strategy is our high risk momentum strategy. It is a mix of again momentum and earning momentum, and the nature of this strategy is that it is concentrated, so it only has 10 stocks, which makes it slightly high risk and high returns, right? So it is our high risk momentum strategies with which we expect higher long-term performance but at a slightly high risk. The best performing month for this particular strategy was in fact January, followed by June and April. It has been the top performer among all PMS strategies in few of the months, but it has also seen some volatile times. For example, February and March was a little bit volatile for it, and even November, December has been slightly volatile. But this is our high risk, high return strategy and we expect it to perform well. Our momentum strategy, like the name says, is based on momentum. It looks at the price momentum, which is based on the price trend, and also earning momentum, which is based on the analyst expectations. So this is our momentum strategy, which is more diversified in nature. You'll have 20-25 stocks and you expect it to perform really well in bullish markets and also be very robust in slightly risky markets. The Wright Momentum Fund has also done close to 35% returns. The best months for it also were January, July and April. This strategy was slightly lagging our other strategies in 2023, but if you look at 2024, this strategy has made a great comeback and it has been again in the top quartile performers and has finished very strongly. You will see that in the recent times, this strategy has actually been one of our best performers. Now the next section of our 2024 wrap is what were the top performing stocks across our portfolios. So in our factor strategy, you will see a very good mix of stocks that actually performed really well. The best performing stock for this strategy in the year 2024, in fact, was Dixon Technologies. Dixon Technologies is an electronic manufacturing service stock which manufactures components for mobile phones and other white goods for different companies. This stock has had an exceptional year, and while we closed out this stocks in factor strategy, it still has been the best performing stock for the factor strategy. Dixon is followed by a unique stock in the refinery segment, which is MRPL, Mangalore Refinery. In the initial part of the year has been a standout performer for our factor strategy. Finally, one stock that we're holding still, which is Paytm, has again been a best performer in this strategy. Paytm, after seeing a significant correction after news broke out about RBI shutting down their payment bank, has made a very strong recovery and has had a good allocation and factor strategy and has been a top performer in that strategy. What you will notice is all of these stocks are from different segments, which makes it very interesting. In our alpha strategy, the best performing stock has been PG Electroplast. I've been talking about PG Electroplast in different forums also, and this is again an electronic manufacturing stock, a consumer durable stock, a homegrown company that makes ACs, refrigerator, TVs, etc. Right? And this stock has seen very strong growth, still going strong, and has been the best performer with more than 100% returns in our alpha strategy. This is followed by Trent. So Trent has also been an exceptional stock for our alpha strategy. Trent is a stock in the retail segment. It has Zudio and Westside, these large retail chains which sell clothing items. You have seen that in the consumer space, Trent has been the best executor. They've been opening new stores and seeing very robust growth, and this stock has been an outperformer in our strategy as well. Finally, you have Jubilant Pharma. This stock in the pharma segment has been another standout. You've seen this stock also grow very significantly, and like other stocks in the pharma segment, this has been a standout. In our momentum strategy, the top performers were, first is Anantraj. Anantraj is a stock in the real estate segment, and especially this has a lot of footprint in the data center space, right? And being in the real estate segment as well, you've seen this stock grow a lot, and it has been a top performer in our momentum strategy. This is followed by GVTND. Now, GVTND has also been an exceptional performer. It is, it manages the grid system for GE in India. It deals in the transmission and distribution business, and it has been a strong performer in our momentum strategy. Finally, PG Electroplast, again in the momentum strategy, like Alpha, has been a standout performer. Now, for the next step of the wrap, we'll go over the allocation breakdown. How did the strategies evolve over this 1 year? So while, performance is a number, it looks great. You can talk about risk, we did well or not, but the actual hard work or the actual intelligence that came into the strategies was how the sector allocation has evolved in these strategies, right? All of us started 2024 with high allocation to the PSU segment, the defense segment, the infrastructure segment, etc., right? And that is what our strategies had. But what you would see is that our allocations evolved very gracefully to the next set of segments during this year. So 2024 has seen that infrastructure segment start at a massive bull run and then go through significant corrections after the budget in June and July. Right? Our strategies have been evolving and deallocating from these segments from February itself, and come July, August, we had very little allocation to these segments, and we had pivoted to the new set of stocks which are more in the defensive segments, few of which we have already named, like PG Electroplast, Jubilant Pharma, etc. If you look at our allocation right now, what you would see is capital market as a segment with a few AMC stocks, few tech players in the AMC space, and a few e-commerce players in the fintech space are forming a good chunk of our allocation. Then you have pharma, then you have a lot of consumer linked stocks. Along with that, we have a few infrastructure, green energy, real estate, and all those stocks as well. Even in terms of our factor evolution in our factor strategy, that evolution has been very strong. We started with big allocation to momentum strategy, which gave us the infra stocks, but our focus shifted gradually to more quality and value. And as our focus shifted, our sector allocation also evolved with that, and that has been the trigger through which we we've seen this graceful evolution of our sectors as well. And the sector allocation has actually been very correct initially in the beginning of the year. Then we saw a transition, and towards the end of the year, again, the sector allocation has been very strong, due to which, we did not have to deallocate at all during the market correction. We were fully allocated, and still we built a strong outperformance over the benchmarks during that time. Now let's go over a few milestones that we achieved with our PMS this year. There were AUM milestones. Like I said, we started with 60 crores in AUM, and we are ending it with close to 400 crores in AUM. So there has been close to 7 times growth in our size during first year of our existence. Secondly, big milestones that I count for our strategy is the evolution of our quant models. There were so many modifications and improvements that we actually did in our models. We have increased the universe size across our strategies. We have added risk management for high risk PSU segments. We've added the Fear and Greed Index, which helps us allocate client funds more efficiently. Then we have also added news-based sentiment. We have enhanced our regime models, adding economic data, and we've made a number of improvements across our strategies. Another key achievement for us was the key collaborations and partnership that we have built. We've added wealth managers like Nuvama, Credence Family Office, PMS Bazaar, PMSA Effort, and many more who are distributing our products, and made headways with many other wealth managers with whom we are exploring better partnerships. Obviously, along with this, the outperformance was also a big milestone which we have gone through in depth. And I think the recognition that we got and the thought leadership that we showed was also a big milestone for us in 2024. We received a lot of engagement across the social media, and we were invited to participate in many large industry panels and news media, which gave us a greater thought leadership. Our team also made many client-centric innovations. If you remember, in 2024, I used to be there for sales along with only one other person. But during this year, right now, apart from me, we have 3 people who are doing sales and investor relations. We have very smart people who have joined our team and who are doing excellent job, as our clients would say, in relationship management. Along with it, we've added people for account opening. We moved to digital onboarding. And we've onboarded many NRI clients. So last year we only had one, and we were struggling with NRI onboarding. And right now, I think more than 10% of our volumes is NRIs, and we're doing it really robustly. We added dealers in our team. We have really improved our system. So while you see outside of the PMS, inside of it, there's a lot of technology and a lot of systems that go on where we made a lot of great moves and really optimized how we function. Even in our execution, we have evolved. So while we started with only algo-based orders initially, now we've been doing a few block trades in the market and getting great prices for our clients. Now, next step of the wrap video is the important one, which is risk management, right? Performance. You've seen anybody and everybody perform during a bull market, but what really matters from a PMS, from your investment manager, is that you should be able to manage risk well also. We showed excellent risk management, number one, by a tactical shift, right? So we went over how our sectors have evolved and how our factors have evolved. That diversification and that tacticalness in our strategy is the first step of risk management, which actually has proven really well. If we were actually staying with the initial allocation, which started at the beginning of the year, we would have seen massive corrections. We evolved our allocation, we've tactically shifted, which has actually proven really amazing in the market in the last part of the year. Second is the hedging that we did. I think that was something that really clicked for our clients. Around the elections, nobody was hedging, nobody was going on cash calls. And what was concerning at that point is that the VIX levels were rising. And our strategies recognized that because the VIX levels are rising, we need to hedge and we need to take those cash calls. So we were the only people who went into cash around that time. We deployed hedges, which ended up proving excellent on the election-based correction. When the market saw that 6.5% correction, we only saw 3.5% correction and a very quick recovery. So hedging and risk management has also been a very, very strong suit for us in this year. Now let's come over to the fun part of the wrap video, which was the community and engagement. During this 1 year, we have almost done one webinar every month where we have addressed our performance as well as the market scenario and what we are doing and how we are navigating it on our YouTube channels. We have hosted client-only webinars every quarter in this financial year, and where we've seen most of our clients join in and ask us questions and understand why and how the stocks were selected. We've started a WhatsApp group for announcements. We've created WhatsApp number where people can reach out. We have dedicated phone lines where people can contact us. We've also hosted some amazing meetups for our clients. Our first meetup was in Bangalore, where we saw a good number of people came in. Then we hosted a meetup here in Bombay. We saw an amazing set of people come in full range and still engage so much with us. And then we again hosted a meetup in Bangalore towards the end of the year, which again got a very good engagement. What we plan to do is do a number of other meetups in other cities like Chennai, Ahmedabad, Hyderabad, Delhi, etc. So here a quick snapshot of some of the testimonials that our clients gave in these webinars.
I started investing in small cases. Now I moved on last year to PMS. So it's been a great journey, and I believe in this philosophy of Wright on the quant, and I was looking for some PMS with quant basis investing, and Wright was right there.
Happy to be on the Wright PMS platform for the last 4 months. I have seen a good potential in terms of the strategies, the allocation of the money, de-risking the market risk, etc.
The returns were very good. Professionalism is very good. They have a good communication channels where we can ask our doubts.
My experience with Wright in that sense is extremely positive because of this kind of relationship they have with their investors.
Now let's talk about what is the outlook for the next year, right? Obviously, you cannot wrap a year without making a few predictions, right? So, the next year is going to be a very eventful one. Come January, Donald Trump is going to come into office, and Donald Trump is known for making very, very erratic decisions. He's already made a lot of announcements about how he's going to change tariffs. He's spoken against India in terms of tariffs. He's spoken about, putting tariffs on Canada, Mexico, and sort of disrupting the global supply chain a little bit. You have Department of Government Efficiency being run by Elon Musk and other tech folks, which is going to optimize the government spending, which will have disruptions in the US itself. So what Donald Trump does, how does it impact different parts of the global economy? How does it impact America? All of that is going to be very important, and it's going to move the markets quite a bit. We'll see how do key global events like the interest rate cut sort of impact. I think the Fed turned hawkish in December. They did cut rates, but they became a little bit hawkish. And how does that stance sort of change in this year will be very important. We all expect even the RBI to start cutting rates at the beginning of the year. We expect something good to be announced by the Indian government in the budget. We've seen Indian government not spend a lot this year, right? And this whole financial year, the capex by the government has been very low. People are waiting for the capex to restart, and that will be an important cue to watch. So given all these uncertainties, our allocations are very defensive. We are betting on sectors that are more defensive in nature, that cannot move a lot because of these news, and I think that will be the safe way to go about it in the first half of the year. Earnings have been at a low towards the end of 2024. We expect them to start inching up, but not very drastically. I think towards the beginning of the year, we will see the growth pick up. We will see growth come back in the economy. During the meantime, I think our strategy will continue to be defensive from what we can see, even though we have added a few cyclical stocks recently. And obviously, the most important thing to watch would be what comes out from the US in terms of policies. So 2025, we are cautiously optimistic. We expect growth to actually come back because we are at a bottom of growth in the economy right now. As the rate cuts happen in India, as the policy uncertainty goes away, as maybe a few geopolitical issues get solved, we expect the markets to start being robust and 2025 to be an optimistic year. So in fact, if somebody is looking to invest for that growth, right now might be great time to invest into the market and be prepared for the growth that could come. Now the last part of the wrap video, I will go over some fun facts and trivia about our strategies, our small cases and our PMS. So we've already talked about the best performer stocks across our strategies. Let's go over and understand what were the long-term and short-term split. I think a lot of people ask us, how much of your investment is long-term in nature in terms of taxation and how much is short-term. So looking at our factor strategy, you will see, right now we are holding 6 stocks that have been held for close to a year, and they will amount to, I assume, 30% of our PNL when we close out this financial year. So 30% of your tax will be long-term and 70% short-term, while we will also do tax loss harvesting. Now, quant strategies have a bad name that they are churning too much. But in fact, if you look at a factor strategy, our average holding period has been close to 120 days, and more than 22 stocks in our portfolio have been held for more than 6 months. So the fun fact is that quant strategies are not that high churn or that bad for taxation as you would assume, and that is what our strategy showcases. Finally, another fun fact is that we have improvised a lot on our model. So we started with close to 300 factors that we track. We've actually added 200 more. We have enhanced our regime model, and we've added the fear and greed index, and it has a tactical nature of our strategies by certain rules as well. Internally, we have built better dashboards for tracking economic data, all the different regimes and the factors that we sort of track for different stocks. Finally, December has been one of the best years for us. We've added the maximum number of AUM in our strategy in December, and also seen a strong recovery from the correction that happened in October and November. Also, about our team, while many of you only see me, Pratishtha or Siddharth or Alina on these videos, we have a team of 15 members. We have actually shifted our office recently. We have not released that on social media, but we'll do that soon. In our office, you will see across our 15-member team, around 8 people sit in our office, of which the fun fact is that if you look at my sales and relationship management team, they all work most Saturdays and even sometimes on Sundays. If you look at the average leaves taken by teammates in our team, you would see hardly 5 to 6 leaves being taken across 2024 by our teammates. People are working for an average of 8 to 10 hours every day. So while the picture might seem different on social media, you will see a big dedicated set of people who are putting so much time and effort for you, and which is something we have to be thankful for in 2024. So that was our quick wrap about 2024 and the Wright Research strategies. Did you invest with us in 2024, and did you like this wrap video? Please do let us know in the comment section below. We know 2025 might be even more eventful than 2024, but we hope for a much more optimistic outlook and a stronger performance in the new year. So wishing you and your family a very happy new year and happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.